World Bank and Oxfam reports say India's welfare programs reduce inequality, but employment empowerment is key. Good afternoon, everyone. When we talk about inequality, we're often faced with a complex question. How do we reduce poverty and ensure that people can thrive, not just survive? India, a country of over 1.4 billion people, has made remarkable strides in reducing poverty through welfare and income distribution programs. However, we still face an ongoing challenge. How do we ensure that these efforts lead to sustained progress and self-sufficiency for those who benefit from them? In today's talk, I'll walk you through the recent reports on inequality in India, one from the World Bank and one from Oxfam, and explore the role of welfare programs in shaping a fairer, more equitable future. Before we get into details, let me introduce myself. My name is Ms. Malvika, AI assistant of Dr. V.V.L.N.Sastry, jurist, international arbitrator, financial economist, and Fulbright scholar. Dr. Sastry assigned me this work of narrating the World Bank and Oxfam reports and stressed the need for employment empowerment in India for overall growth of India. Now, let us get into details of the topic. In the past decade, India has seen notable improvements in reducing poverty, largely through various welfare and income distribution programs implemented by both the central and state governments. The World Bank report highlights this progress, noting a significant reduction in extreme poverty, with the rate dropping from 16.2% in 2011 to just 2.3% in 2022. How did this happen? Welfare programs like the Public Distribution System, PDS, Mahatma Gandhi National Rural Employment Guarantee Act, NREGA, and direct cash transfers have been instrumental in lifting millions of people out of extreme poverty. These programs aim to ensure that the basic needs of citizens are met, especially in rural and underprivileged areas. But here's the crucial point. While income distribution has helped reduce poverty, the question remains: how do we make these people self-sustaining? How do we ensure that after receiving this help, they don't fall back into poverty once the assistance is withdrawn? World Bank report, Welfare Programs at the Forefront. The World Bank's Poverty and Equity Brief for India reports that the Gini Index, a measure of income inequality, has improved slightly in recent years. This improvement is not by accident. Governments have invested significantly in income distribution programs designed to support the poorest half of the population. While this is certainly a success in terms of poverty reduction, there is an important distinction. These programs rely heavily on taxpayer money being redistributed. Welfare programs can help stabilize income and alleviate poverty temporarily, but without a long-term path to economic independence, beneficiaries will remain dependent on such assistance. The ultimate goal should not be continuous redistribution, but creating opportunities for people to earn through hard work, employment, and self-sustenance. Oxfam report, The Underlying Inequality. Let's also turn to Oxfam's 2023 report. It paints a stark picture of wealth concentration in India, with the top 1% controlling over 40% of the nation's wealth. But today, we're not focusing on wealth redistribution, we're talking about income distribution through welfare programs. The challenge lies not just in providing temporary relief, but ensuring that those who receive welfare can transition to sustainable sources of income. Oxfam reports that the top 10% of India's population controls 77% of the country's wealth, while the bottom half of the population has seen a mere 1% increase in their wealth since 2017. This growing wealth gap makes it clear that while welfare programs are crucial in reducing income inequality in the short term, they do little to address the long-term structural inequality rooted in wealth and opportunity. The pitfalls of continued welfare without sustainable employment. Let's dive into the pitfalls of continued welfare without a focus on creating sustainable income sources. Income distribution programs like cash transfers and food subsidies are vital, but they can only go so far. Here's why: dependency on redistribution. welfare programs are designed to distribute resources to those in need, which is essential for reducing poverty. But if this redistribution continues without creating pathways for self-sustaining employment, it can lead to a culture of dependency, where people rely on external aid rather than developing the skills and opportunities to generate income on their own. Example: Mnriga provides guaranteed employment in rural areas, but its success depends on the availability of meaningful, productive work that helps beneficiaries develop skills and build long-term income. Short-term vs. long-term solutions. Welfare programs are designed for immediate relief, but the question is, what happens next? After receiving aid, how do individuals sustain themselves? Without proper employment or avenues for entrepreneurship, people often find themselves back at square one. Example: education and skills training programs, when incorporated with welfare efforts, can significantly increase long-term employability, thus reducing the need for further assistance. Wealth concentration and economic mobility. While income distribution through welfare programs reduces poverty, it does not address the underlying wealth concentration. The wealthiest 1% in India are still getting richer, which means that those at the bottom remain far behind. Programs that focus only on redistribution miss the mark because they don't provide a level playing field in terms of access to assets or capital for people to build wealth through their own efforts. The path forward: empowering through employment. The challenge moving forward is to ensure that those who benefit from welfare programs are not left in a perpetual cycle of dependency. Empowerment through employment is the key. To make this work, India needs skill development and vocational training. Governments should focus on equipping people with the skills they need to compete in the labor market. Whether it's entrepreneurship programs, vocational education, or technology training, providing people the tools to build their own businesses or secure better-paying jobs is critical. Access to affordable credit. Creating avenues for the poor to access credit can encourage entrepreneurship. Without the ability to access capital, people remain stuck in poverty. Job creation and sustainable economic growth. Investment in infrastructure and manufacturing can provide steady job opportunities. Governments should incentivize private companies to invest in low-income regions, ensuring that jobs are created in communities that need them most. In conclusion, welfare programs are a vital tool for poverty alleviation, but they must be seen as part of a broader strategy to empower individuals through employment, education, and entrepreneurship. Only when we focus on creating self-sustaining economic mobility will we see lasting reductions in income inequality. Welfare cannot be a permanent crutch. It must lead to the development of capabilities that allow individuals to generate their own income and wealth. So, as we continue with these programs, let's ensure they aren't just a band-aid on the wound of poverty, but the first step toward a truly empowered and self-reliant population. If you like this, please don't hesitate to like, subscribe, and share this video, and stay tuned for more updates from one and only Dr. V.V.L.N.Sastry's YouTube channel. Thank you.